You have questions, we have answers. This is Jane Miller.
And this is Ken Miller. Welcome to our show, all about real estate with Ken and Jane. Today, we're excited to talk about a topic that is often behind the scenes, but is quite important when you buy or refinance real estate, and that is title insurance. And we're joined today by two partners of North Star Title, David Rickenbach and Peter Casey Wall. Guys, big welcome to the show.
Welcome.
Thanks for having us.
All right. So thank you for coming. And to get started, please introduce your company and the services you guys provide.
Sure. So we're North Star Title. We're a new title agency, but I like to say we're not new because we're already up to 23 employees, aggregate over 300 years experience, and we love what we do.
Mm-hmm. Yeah, the median experience for our employees is about 20 years. Yeah. Most of our people are industry veterans.
Wow.
We've got a few newbies, but we're teaching them up right, and so far we've got a great team.
Awesome. So when did you guys start? When you're like 15? Because you had 20, you're about 35 now. So.
Thank you, Ken.
Ken, I'm sure they're going to take us for lunch now after the compliment.
They are videoing. Nobody's going to believe you after they see the video.
Don't worry. We can't go lunch. We have open house, so don't worry.
Yeah, exactly.
You have a good filter?
We're not going to, see you spoiled.
I was
looking to try to fool them. You guys, we all put the Grecian gray to cover up the gray, right?
Yeah, that's right.
Yeah. All right. So let's get into title insurance. So what a lot of listeners are probably wondering is what title insurance is, when it's required. Is it like home? What's the differentiation between that and homeowners or autos in terms of the payment frequency?
Sure.
So if you want to just touch upon the overview of it before we get into the nuts and bolts.
Sure. Look, I'll give you a brief rundown. So by definition, title insurance is what's called a contract of indemnity. The insured gets a piece of paper that says, we insure that title to this property is in these people or these entities, with the exception of these things, these outstanding liens or these encumbrances on the property in the form of easements or restrictions. It's backward looking. Title insurance looks to the past. We're really in the business of risk elimination. Versus other insurances, which are risk acceptance. We determine how much, they determine how much risk they're willing to accept, and then they charge you once a month for the privilege of being insured against those things that might happen. Whereas title insurance, what we do is a lot of research and a lot of due diligence, and we handle the closing of the property in most cases. So we make sure that everybody gets paid and everything gets paid off, and there are no problems going forward. And in the event that something is missed because of an indexing error or what have you, we stand by our policy to make the insured whole for any losses.
Mm-hmm. Right. And it's important. Why is it important to have title insurance when you buy real estate?
I often like to say when you leave the closing table, the only thing you really have as far as the ownership of the property is the keys in your hand and the guarantee of title insurance that you paid for at the settlement. And that should give you good peace of mind and allow you to be able to then subsequently finance without too much trouble, or to sell the property without worrying that something's going to come up when that buyer does their due diligence and finds problems in the chain of title or problems in the record as far as liens or encumbrances.
Right. So in essence, what title insurance is, it insures the buyer or the soon to be the owner of the property. That title is vested in them for the amount of the purchase price, or whatever amount they decide to insure it for, subject based on your search of public records and liens and all the public information. You don't insure against future things for future taxes or future liens, because of course, but you do a judgment search of the sellers and the buyers, and you find out that there's no liens on the property, or if there are liens, you bring it to the attention of the attorneys, and the liens have to get settled, paid off prior to closing, because as we know in New Jersey, the liens based on the statute, they attach to any real estate owned by the debtor for 20 years, and it can be reinstated. So that's a very important thing. So let's get into the process of how you go about insuring it. Let's step back when somebody places an order, but usually the attorney or the realtor, if they're not using an attorney, but most closings in this part of Jersey are using lawyers. So let's talk about what you guys do. We can talk about the notice of settlement, the title binder, what goes into composing that luminous.
Yeah, all right. This is
you
going to be this is going to be my moment.
You want to put people to sleep?
Oh, look, this is for a title nerd like me. This is like you just invited me to tell you all my secrets.
I actually read the binders. I know some attorneys may wait till a week before, but you guys are usually good because you alert if there's an issue. I think you guys work with the attorneys and the realtors and alert them. But most attorneys, they should read the binder because that's critical, and you're going to explain what's in it.
Yeah, look, I'll give you a rundown on how the process works, but I also want to say is like your assessment of what title insurance is very accurate. The one thing though that I would want to maybe make a correction on is you were saying that it only ever insures things about the past. And at the base level, that's very correct. But there is a product for residential 1 to 4 family properties that are going to be owner-occupied called the Enhanced Owner's Policy. And that actually insures not only all the base things that we know that we want covered, but it also insures against some things that aren't generally or traditionally considered title insurance. Post-closing forgery, encroachments into easement areas or encroachments of structures from your neighbor's property onto your land or from your land onto the neighbor's land. So there's like 20 or 30 additional coverages in the enhanced policy. And the amazing thing about it is it's only a 20% increase in premium one time. You pay it once. And then the other neat fact is that a standard owner's policy is good for as long as you own the property. But an enhanced owner's policy is good for your lifetime. So if something were to arise and there were litigation where you're being brought in as a prior owner, if it fell under the coverages of that policy, you would still be covered.
So when you say it insures against future encroachments, let's say I have an encroachment, I have that enhanced policy with you, and I have an encroachment on my neighbor's property. When you say it insures it, if I have that policy, it insures it, meaning that it covers my legal fees in settling with the adjacent property owner with whom I've encroached, or what is an insurance actually in the?
I can't go too deep into what exactly it will cover, other than to say that the underwriters will accept your claim and review it and see if there's any.
They can give you compensation.
If they can either give you compensation or help to mitigate the problem.
Okay. I think for the audience there, if you just bought a property, just went on a contract or about to purchase one, please make sure, speak to your attorney, speak to the title company to make sure, ask for this enhanced policy. It's really worth it because, as you said, right, it's once off. It's not like every month you have to pay for such a large purchase. It's peace of mind is very important. And that's really worth it. I had, when I was a brand new agent, right, 16 years ago, there was a case in our office. I was brand new. I still remembered. And there was a cash buyer. I think they are so smart because so experienced, a cash buyer. They bought a lot of properties, right, during the 2010, before 11, so 2010. So they just bought a cash. Didn't even bother to hire a lawyer. They figured, why spend money? So it's so cheap anyway. If anything happened, I mean, it's not going to hurt me, right? So they bought a bunch of properties, cash, no lawyer, no title, just bought it. And later on, one of them had a huge problem. At the end, the problem worth more than the property itself. Wow. Because remember, they bought 2010, okay? So 2009, 2010. And then the market went further down, 11 and 12. So when that problem happened later on, when the bank get a head over and say how much they actually owe, there was a lot of big problems for the owner to handle. So that's why I learned very, very young, not age-wise, but experience-wise, you have to do a title. If any of my clients don't want to have a title company, I put them in writing, say, please sign here. You have to have a lawyer, you have to have a title.
Let's talk about the risks that are involved without having title insurance. Much like health insurance, everything could work out smoothly. If you never have health insurance, you could live to be 80, 90 and never claim it. But you're taking a big, big risk. And likewise, without having title insurance, can you talk about the risks first of all, how do you even know the seller has the vested title, and also talk about the judgments and the liens? Again, let's talk about
so before we get down that road, I'm going to say like a good indicator of why owner's title insurance should be something that you prioritize is the fact that if you go to get a mortgage, there's no lender that's going to say, I'll give you a mortgage without you buying me title insurance. So if the lenders are saying, I want to be assured that this property is owned by you or owned by who we think it is, you should want that same coverage.
Yes.
And one of the good things about getting an owner's policy simultaneously with the loan policy is that the way the premiums are structured in New Jersey, the greater liability, either the purchase price or the loan amount, is what the premium is based on. And the second policy is issued for a simultaneous issue fee of $25. So it's a minimal cost to get that secondary policy issued, and you're only paying for the premium on the greater liability of either the purchase price or the mortgages. So it's definitely worthwhile. And, I'm going to couple talking about what we do and the process at the same time here to get it rolling.
Sure.
Here's what happens. So in North Jersey, typically the attorneys, most buyers will have an attorney, so the attorney will send an order into the title company, and the title company will coordinate all of the ordering of all the searches from the county clerk's office and the New Jersey Superior Court for judgments and the Tidelands Bureau for Tidelands maps, and we'll compile all those searches, and then we have licensed examiners who look at it and decide what needs to go on our commitment. And the commitment is broken up into 3 key parts. Schedule A says, here's who we're going to agree to insure for what amounts. Schedule B, Part 1, says these are the requirements that must be met in order for us to give this insurance. And Schedule B, Part 2, says these are the things that are going to be exceptions to the coverage on the policy when we ultimately insure it. And that's the basics of it. So the commitment gets finished. We send it out in a package that includes, as you mentioned previously, the notice of settlement, which is a document that's unique to New Jersey. And title companies across the nation are jealous of us because we have this unique document that we can file. What it does is when you file a notice of settlement, it protects the buyer, the seller, the title company, and the attorney from any intervening liens that might come in between the time of the board date on the commitment and the date of closing. So we file that right at the time the commitment comes in to make sure that everybody's protected. We send the commitment and all the ancillary reports and evidence along with it. And then the file gets moved out of the examining department over to the processors, who then pick it up and run with it. And they assist the attorneys with any clearances. We offer all levels of assistance. We have some attorney clients, very few, but some who do everything themselves. We have some attorneys where we do everything, and they just come to the closing and make sure everything is satisfactory. And then we have some hybrid cases where we give assistive services for them to do the clearance, but ultimately we end up dispersing.
Okay, yeah. All right, we're going to take a quick break. We'll pick it up right after these messages. Okay, welcome back to our show. We're joined today by David Rickenbach and Peter Casey Wall of North Star Title. And guys, please give your contact information if any attorney or buyer needs to reach out to you for title insurance.
You can reach us on the web at www.northstartitle.com, or you can call our main line at 732-589-7250.
Okay, thank you, Peter. So let's get back into the binder. So it's quite large, a lot of documents when an attorney gets it, and it has a lot of important information in it. Let's dissect it a bit and talk about what's in the title binder report, which is the basis and it'll have the things that the attorneys and the buyers and the sellers may need to address before a clear title can be issued. So if you want to talk about, maybe let's start off with talking about the judgment search.
Sure.
And who that's done on and why that's important again.
Sure. The judgments will be run every time on the current owners. We want to know what judgments may have been filed against them. The search searches all of the New Jersey and federal courts. So it'll also bring up any open bankruptcies as well. And we're also going to run anybody who is entitled in the past 20 years. Anybody who is entitled in the past 20 years, their judgments that would have attached up to the time they came out of title are something we would need to contend with. There are some exceptions. We might not run it if we have an owner's policy insuring the current seller. that's free of any prior owner judgments.
That was I was going to ask you that. What happens in the case
Yeah.
where there is a judgment, but the current owner has a policy that's free and clear of it, and then how the title companies work with each other to kind of you kind of piggyback on that, and
That's an insightful question.
Yeah.
So there's
There's
a
you're
thing.
stealing all my thunder, but that's good. Yeah, go ahead. You can go.
No, this is great. We're simpatico here.
Yeah.
So there's a thing called the Inter-Underwriter Indemnity Treaty.
Wow, that's
all of the it's a mouthful. All of the underwriters in the state have basically agreed that if you have a fully executed and formed full copy of the seller's owner's policy, and it's free of exceptions for certain types of things, we can insure without exception based upon that fact, or with just giving the prior insurer notice that we intend to insure without exception. There are some things it doesn't cover, like outstanding interests. It doesn't cover that. But outstanding mortgages, yeah, it covers that. Estate taxes, it would cover that as well. There are just certain things where we just need to let the other insurer know, hey, look, we picked up a line of credit mortgage that's still open of record. We're going to insure without exception to it because we have your policy, but that affords them the opportunity to clean it up.
Interesting.
For the listening out there, tip number 2, once you closed, please ask your attorney give you electronic version of your title policy. Save them in your Google Drive, another email, another email. So in case in the future, when you sell your property, they ask you where the policy is, you can't find a folder, make sure you have electronic one. It's again and again, we had an issue at the closing, right? Because as you know, I've been representing a lot of sellers these days. And, another thing pick on what Ken said, a lot of lawyers don't read until 2 days, 1 day before closing. And they say, oh, there's a title issue. When did you get title binder? 2 weeks ago?
5 weeks ago, maybe?
Yeah, 5. Now it's 2 because normally the closing is 45 days, 30 days, 45 days now. And how many times the seller said, I don't have it. So some of them, I represent them. So I said, I know who's your title company. You just type in the bar, blah, blah, blah. They will show up. Sure enough, they show up. They say, Jane, how do you know? I said, I'm lazy, but I'm organized lazy. So I know where to find the stuff because you always ask them to scan and email you, which I know your company always
and
do.
You guys keep a copy now too, right, of everything electronically. So
but the owner may not remember who, because if I represent them purchased 10 years ago, I have a great memory. I mean, I know who the title companies are, or I have in my inbox. I just put the title, the property addresses came up. So I don't have the policy as an agent because policy is sent to the lawyer, but at least I know roughly which title company in the deal, the closing. So I said, just Google that person's email. They may show up. So it did a few times.
Right.
Tip 2A. If you don't remember where you put your title policy, but you have a copy of your deed or you get a copy of the deed
the HUD.
From your sales search, right? If you look at the legal description or the record and return on that deed, a lot of times it'll indicate who the agent was.
Right.
And then we can reach out to those agents. We have good relationships with a lot of agents, and we have great relationships with almost all the underwriters in the state. So we have lots of resources to go hunting. For
what happened if the title? I tell you, this is a true story. I can't make it up. I sold them property, right? So they bought it. Everything's good. They had a title insurance. They had everything. One day, somehow, there was something wrong, okay? So the couple found out late at night for some reason. And then they didn't want to call me. So it was late at night. So they waited until they couldn't sleep all night. And they text me in the morning and say, Jane, we couldn't sleep all night. This is what happened. Their title company actually fraud or something, or the lawyer fraud or something. And they try to find out because they got some notification. At the end, they try to find it. The title company already closed, been sold, whatever. At the end, they got bottom of it. I mean, I don't know how, but they hired a lawyer to do that part. But at the end, we'll work it out. Wow. But that's really, that lawyer actually in jail. That was one of,
I think having the title policy is actually more important than having the deed because the deed is publicly recorded. So if you lose the deed, if you lose, everybody used to be in the old days, everybody wanted that original deed, but now it's all public record. You could just throw I mean, if you have it, it's good, but it's not critical. But the titles policy is really important because for insurability, and if there is a future lien that was, that was previously insured by.
I blame television and the movies. If you watch a TV show or movie where anybody's transferring title to a property, they say, "I've got your deed." That means anything.
And maybe in some states.
It's like saying, "I have a picture of your driver's license." That doesn't mean you're
maybe
you
back
driver's license.
30, 40 years ago, it meant a lot. And maybe in some states it still does. But at least in New Jersey.
I tell you something, right? You guys think, Chinese are crazy, right?
You said that.
I know. But when I was younger, right? I mean, I don't know how long, but when I was in China, right? Whoever had a deposit book, who can go to the bank get money out?
Sure.
Now I thought myself, oh my God! But that time, whoever had that book, you could when I was young. Because whoever has the book can go get the bank, get the money out. So the book is important than actually who's account holder.
Right.
Now you would think it was crazy. It's impossible. Impossible. But back then, I'm not to forget about it. I'm young, so it's not talk about my age. But that time they did it. I think maybe come to the title, maybe 100, 200, few hundred years ago, unless you had that piece of paper, you kind of prove you own it. Maybe that's why. But now everything's online.
Right.
2 seconds online.
Right.
Yeah.
Mm-hmm. So let's talk about judgment searches and what types of judgments come up for the sellers that can pose a problem, like medical and what other.
That's a good one right there. So medical judgments are something that we see. They're usually quite sizable, and they've got to be paid. Those creditors want their money. We also see a lot of small judgments, usually from the DMV or the Division of Taxation, and those are usually easy to get paid off. We also see a lot of child support.
I was just going to support.
Child support is a good fact here is that title insurance is one of the main ways that child support arrearages get brought up to date in the country.
Wow.
So that's aside from making sure that homeowners and purchasers of real estate have peace of mind. We also make sure that parents are fulfilling their obligations.
Mm-hmm.
So just one little tip, because you're right. We do see a lot of these small DMV judgments, $50, $100, and I imagine what's going on is some people are like, "Oh, DMV will forget about it. Well, we don't need to pay it."
They don't realize, most listeners don't realize that judgment, the significance that a judgment attaches to the real estate property they own. They think, it's just somewhere in the wind, or like these medical judgments they have. Maybe it was a dispute, $2,000, $5,000, and they just kept brushing it off. But then until they're ready to sell their real estate.
So it sounds silly, but just pay the bill, because you think you're going to save $50 or $100, but then it slows down your closing. It throws a wrench in things. So
and there's fees and interest,
and the penalties.
Penalties, right?
And interest.
Now, if a seller can't pay it, there's a way to proceed with closing, but you guys just won't insure that judgment. I mean, is that something that can happen, or mostly you won't proceed with it?
Most of the time,
you're holding an escrow. We always because Ken, at the start we talked about, hey, it's important that when you buy a property, you're getting it free and clear of all liens, because you don't want to buy a property subject to anything, right? Yeah. So we're gonna, if the seller can't pay it, maybe they don't have they're illiquid and the money's tied up in the home, we'll hold an escrow from their proceeds.
Yeah.
Gotcha.
There are other circumstances where if it's a judgment for litigation that's being appealed or contended, we'll again hold an escrow to give them an opportunity to come to the end of that appeal or come to the end of that countersuit. And we'll take the result of that as, how the money should be divvied up. But, whenever we're escrowing, every time we have to have a written, signed escrow agreement by all parties. It's important for us to know how much money we're holding, why we're holding it, and what are the terms for its release. And we need to be very explicit about that when we undertake to escrow money.
I have a quick question. I had a case, right? The seller paid off the mortgage 30 years ago. Somehow, somewhere, they never get discharged properly. So now I represent selling the house. So that shows up. So obviously, that bank has closed long time ago.
That was my question.
Long time ago.
Yep.
At the end, luckily, I think the lawyer is very experienced, the legal secretary, So they figured out. I don't know how you figured out.
Yeah, was there? Let me refresh my memory. Was there a system that they have for tracking down who banks? It's the MERS or
Yes.
something that they. I remember vaguely there was a website. Well, I'll let you guys explain how you track down.
Sure.
So the question really is, if there's a mortgage that was paid off, it was never discharged, but the mortgage company A is long gone for the last 15 years. It got transferred from A to mortgage B, who's long gone, and now it's held by God only knows. How do you go about getting the discharge?
We have a few different ways.
And we have about 2 minutes, so we'll make it.
I'll
Ooh,
make
I'll
this
something.
quick.
No,
Right.
make
So
this
the
quick
first
and
one
we'll-
is there's websites like payoffAssist.com where we have a subscription and they can tell you who the current holder of a mortgage is because there's always some successor somewhere. Then you were talking about MERS, which is the Mortgage Electronic Registration Systems out of Minnesota or something like that. There's a MERS number that shows up on MERS mortgages. If you go to their website and plug that number in, it'll tell you who the current holder of the mortgage is, and that's who we go after. We also have a system that we can look at a mortgage, like you were saying, it was 30 years old. If the maturity date of the mortgage, which we assume is 30 years in most cases, but sometimes it's shorter and written on the face of the mortgage, 6 years after the maturity date of the mortgage, if it's a prior owner mortgage, we can discount it because they can no longer foreclose.
Okay.
Oh,
So
interesting. Wow.
usually
That's
say
why.
36 years after the recording of a mortgage or 6 years past its maturity date, we can discount some mortgages.
Wow.
It's case by case basis, and sometimes a lot of that review happens before you even see the commitment. You don't know that the mortgage was even there because we've already cleaned it up.
You really
guess
went to title school. You know your stuff really good.
certified
Yeah.
instructor, so I better know. what I'm
Yeah,
talking
you
about
really do.
sometimes.
Yeah, you guys really do.
And I'll just
Yeah,
chime in there. It for us before we close out a file, we require every single lien is discharge of record. So you close to us, you're not going to have that experience where somewhere down the line, it's still an open mortgage. It's not acceptable on our end.
Right.
Just
If
FYI.
you close out, that's the best way to go. Well, guys, we're out of time, but we're grateful you're coming back next Sunday to continue our discussion on title insurance. And once again, thank you very much, Dave and Peter. And if you want to give your contact info one last time for our listeners, that'd be great.
Sure thing. www.northstartitle.com or 732-589-7250.
Okay. Thanks, everyone. Have a great rest of the weekend.
Thank you.
Thank you.
Thanks, Ken. Thanks.